Hello traders, Gary Wagner for Trending Markets. Approximately 10:45 in Honolulu, 4:45 in New York on Tuesday, October 27th. We do have the equities markets for the second day in a row tracking a little bit lower on the day, off about 41 points, a nominal move in the market, 0.2 of a percentage point, 17,581. As I said, after we have seen such a dynamic move in the marketplace over this month, this is really, we're set for this month to be one of the best months on record. Absolutely the best month since, I believe, 2011. Some sort of retracement in the market does not surprise me at all when we consider that it was just August when we saw this market literally go into a meltdown mode. We hit these record tops, 18,400 in the Dow Jones. Of course, we traded in a narrow channel for the longest time until we broke based on some news from China. Market comes rampant. You can see how this market sold off, but also how it found incredible support and really moved back up the channel, so to speak, in this period of 1 week. And then we had a new level of support at about 16,000. Considering that was really 1, 2, 3, 4, 5 weeks ago, this being the sixth week since that drop, this has been just one incredible roller coaster ride back up. And more importantly, and we'll see that in the Standard & Poor's 500, but back to that 200-day moving average. And I actually find it pretty incredible that we're holding above that particular price point. We'll take a look at it here. This, of course, is a daily chart, Standard & Poor's E-mini 500. We can see this dip right in here, this being the last two trading days in which we have had nominal down days. My question is whether or not this 200-day moving average right in here is actually going to hold, because if it holds and forms a level of support, that to me is just a really strong signal that we will most certainly see a move back up to these highs. Of course, we talked about the highs in the Dow Jones Industrial. These highs come in just above 2125 in the Standard & Poor's. And my sense is that once we find support in this area, and whether or not we find some sort of a dip back down below it and then a move back above it, or whether it holds this particular price point as support, we will take a stab at these record highs and we will exceed these historical and record highs. That is my belief, and that is why I've been talking about just positioning ourselves properly for when that move happens. I'm not convinced that it's going to happen right now. And of course, with FOMC meeting underway today, I really want to see what kind of language comes out of the minutes that we'll get later on. And of course, the conference that is held immediately following that, in which we'll get some sense of really what the Fed is looking at. So we'll have to pay close attention to it. But I do find it interesting that for the last couple of days, we've managed to absolutely close above that, even with these lower closes on the day. A dollar really quieting down right now, found some real resistance at around 97. In terms of the dollar index, you can absolutely see that when we pull up this daily chart. We'll go ahead and blow that up a little bit. But we've had a slight update, but there's no doubt we did get resistance. That resistance came in, as I said, just above 97. You've got these tops right in here, which I believe corresponds to our current level of resistance in the market. Now, absolute support in the market, if you take a look at this top and this clustering of tops, we'd call that a tower top in candlesticks in terms of patterns themselves. That would be support that I would look for it to hold right now. This is a pretty strong level on a technical basis of resistance, prior resistance, which at this point could easily become support. Speaking about support, we certainly didn't see any in oil. We've been looking for lower prices. We're certainly getting them down another over 1.5% on the day, 71 cents per barrel, well below that $44 mark. And so I really think that we're going to see this market potentially drift to some new lows as low as easily $40 or the high 39s. That puts us really just at this level. Let's go ahead and show you what I mean. But this level right in here, now we have had lows that have gone below this particular price point right here. But when you look at the effective opens and closes, meaning it closed above $40 and opened above $40 on the week, and then closed way higher to go to that next level. So I believe that at this point, this break is telling us that we're probably going to come in and challenge $40 per barrel once again. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. The FOMC meeting should be underway, or should have concluded, and at that point, we will look to initiate positions. I'm just a little reluctant to put on positions before any kind of announcement from the Fed. Bye-bye.